All right, so you made it. You made it to the strategy section of this course. Congratulations. Now you have a solid foundation for, what it's going to take to be a successful trader. And all you need now is the strategy. So that's what we're going to spend the rest of this course talking about. This is the strategy that I use, every single day to trade at this point. At the time of this recording, I should say. Now, I don't have anywhere else on the internet where I go into as this much detail about the strategy, or where I do sporadically talk about little pieces of the strategy, but there's nowhere else on the internet from me that's structured this way, that talks about this strategy in this structured format. All right, so enough about that. So let's go ahead and get to the screen. So let's start talking about the strategy. On this screen, we can see this is the overview of how I have my charts laid out with my platform. Of course, I'm using Sierra charts. This is the platform that I recommend that everyone that takes this course uses. Go ahead and make that known right there. Sierra chart, right? I'm not going to go into detail about Sierra chart, but I have plenty of information on the YouTube channel and on the website and all over the place that you can learn more about Sierra chart. But this is the platform that I'm using here. Okay, just to make that clear. All right, so this is my layout on Sierra chart. This is my main window where I do most of my analysis, is where I'm, where I keep most of my focus to look at the structure and make my judgments and decisions based on the price action and what I think the price is going to do or whatever, right? This is the main window that I'm looking at. Now over here on the left, I have my 1 minute time frame. I'm using this for execution. I'm only really using this for execution. This is the time frame that I'm using to determine where I'm going to get into a trade, or when I'm going to get into a trade, where I'm looking for my signals, and how I'm going to manage that trade as I'm in it. Now over here, these time frames below, we have the 1 hour, the daily, and the 30-minute. Basically, these time frames are used to get the bigger picture. I'm using the daily time frame. I'm using this in my nightly preparation and my pre-market preparation, just to get a understanding of the main trend for the market, right, or for what I'm trading. So that's what I'm using the daily for. Right now we can see the overall trend is bullish. So with that, I'm taking away that any potential positions to the long side will typically have more strength, or are more likely to work out than any short trades, because we're going to have a lot of buyers in this market. So with this 30-minute time frame over here to the right, I'm using this to get a big picture of the intraday price action, or the intraday price structure. All right, so for this 1 hour time frame, I'm not really paying a lot of attention to this time frame. I'm only using this for my power range, which I'll get to in a couple seconds. So that's all I'm really using for this. I mean, I can use it to see the big picture, but I'm really using the 30-minute for that. So all I'm using this 1 hour for is it's for my power range. That's all I'm really using it for. Okay. Now, before we get to the power range, let's talk about our indicators. Of course, we know we're still messing with Sierra chart, so I can remove that. So these indicators are the indicators that I was using before I developed this strategy, before I discovered the power range and I started building a strategy based off the power range. This is not a full list of the indicators that I used before I started using this strategy, but these are the indicators that I stuck with. These indicators are not necessarily, they're not necessary, but they still do help, but you don't need them. You really don't need any of these indicators. The reason why I use indicators is to see historical support and resistance, where I can expect buyers and sellers to be hanging out, right? So I'm not really using these necessarily to make decisions on entering a trade. That's how I used to use it, but I don't use these indicators like that anymore. What I'm using them for is just, okay, once price starts to trade down into these different indicators, I'm looking to see what kind of response we get. So for example, we see this area right here where price, we had a nice little run up there. What I'm looking for is price to trade back down to this, what I'm calling the K band. And as price trade down here, I'm not expecting to get a big response, because I consider this to be a weak indicator of historical support and resistance. All right, so let's just go ahead and dive a little bit deeper into what each of these indicators are. All right, so let's start with the VWAP. The VWAP here, we have, this is where I'm expecting to see the biggest response in terms of these indicators. And the reason for that is because it's just like it's like the most popular indicator in the trading industry, right? In the trading world, right? Everybody uses the VWAP in some way, shape, or another. Institutions use the VWAP, retail traders use the VWAP. All corners of the market, in some way, shape, or form use the VWAP. That doesn't mean everybody uses the VWAP, but most of the market uses the VWAP. So I'm expecting some sort of response, and I'm watching the VWAP. Once price trades that back down to VWAP, I'm watching the VWAP for a response, right? Now the next one we're going to look at is the 200 SMA. All right, so from just ranking this from strongest response to weakest response, the 200 simple moving average is next on this list. So that's, that's really all it is. And then next on this list, we have our K-band, what I'm calling the K-band, which is this little blue line right there. Now this K-band, all this K-band is just the Keltner channel. I'm just calling it K-band just to keep it simple, but it's the midline or the median line or the average line of the Keltner channel. And so lastly on this list, we're going to talk about what I'm calling the itchy stop. Okay, this itchy stop, all it is the Kijun for the Ichimoku cloud, right? I've seen it also called the base of the Ichimoku cloud, right? The only reason I call it the itchy stop is because for my original strategy, I use this as a stop loss. Okay, so these are just the indicators of this strategy. Like I said, you don't necessarily need these indicators, but these indicators do help to kind of see where it's likely to see a response that can kind of help you make some trading decisions in terms of trade management, right? All right, so getting into the next thing, we're going to get into the foundation of this strategy, which is the power range. Now, the power range in and of itself is these green dashed lines here. So let me get my thing here. All right, so these lines right here, actually, let me move this out of the way. All right. So these lines right there, these green dashed lines, this is my power range. This is the power range high, as you can see over here, the power range high and the power range low. Okay. Now, where this comes from, it comes from the first hour of the trading session, and it's just the high and the low of the first hour of the trading session. Okay. So that's going to make more sense if it doesn't make sense right now. It's really simple, but if it doesn't make sense right now, it'll make more sense once we step into the real hands-on of this strategy and how we can put all of these pieces together. This is not like some kind of proprietary system to where you got to buy my, software or whatever to get this. No, you can put all of this stuff together. All of these tools and all of these indicators that I use are available on most trading platforms, and you don't have to pay anything extra to get all of the stuff that I use for the strategy. Okay. So this is our power range, our highs and our lows. Now, of course, another level that I like to take note of is what I call the PR50, which is 50% of the power range, high and low. And as you can see, a lot of times we do see a response at this level, right? We can look at this area right here and see that we saw a price response at this PR50 level, right? So that's another level. Now this PR50 comes from our Fibonacci extensions, right? Which we'll start talking about now. And these other lines here, all these other horizontal lines, this is from just our Fibonacci extension. Later, I will show you how to set all this up. But these levels are 1.68 times 10, right? So all that means is this first level is 1.618. This second level is 2.618, third level 3.618, and so forth and so on. You get it, right? So what I call these is, to keep the terminology simple, is PR1, PR plus 1, PR plus 2, PR plus 3, and PR plus 4. And in our bear zone, I call this PR minus 1, PR minus 2, PR minus 3, PR minus 4. And I have 10 of these on each side, right? So we go all the way from PR minus 1 to PR minus 10. And then from PR plus 1 to PR plus 10. Okay. Now, you heard me mention the bear zone down here. So we can split these levels, or this whole thing, up into 3 sections. So we have above the power range, or above the PR plus 1, which is our bull zone. So when price is hanging around above PR plus 1, we are trading in the bull zone, which means our trend is bullish, and we can be looking for a long position. If we are below PR minus 1, then that means we're in the bear zone. So our trend is bearish, which means that we can be looking for a short position. And when we're in a neutral zone, it's not bullish or bearish, it's just neutral. and we can actually trade it in either direction, or we can just wait for it or we can just wait for price to trade into a bull zone or a bear zone, right? So this is in a nutshell how we use the power range and how we use it, right? It's like I said, it's a very simple thing to do. You know, it's over time it becomes second nature and it's easier to see these. And we just look for how structure responds to each of these levels and in each of these zones. Okay. All right. So moving on. The next thing we're looking at that is of importance is our volume profile. This is another one that I use. This is a very important piece of this strategy. So if you want to keep your charts as minimal as possible, you can just use the volume profile and the power range levels. So, and that's all you really need. You don't really need anything beyond the power range or the volume profile and the power range levels. With the volume profile, I don't really change much in terms of the default settings. I do kind of make a couple settings, mostly with how it, the visual representation of it, so it looks the way it looks. And I will go over the settings for how I got this volume profile set up. But the best thing that you can do is with this course, you also get access to my chart book for Sierra chart. So if you get Sierra chart, which I highly recommend again, to get Sierra chart, you can just download my chart book and you will get everything set up the way that I have it set up. And you won't have to change a thing. All right. Only if you want to make it look a little different. You can change it if you want to, but you don't have to change a thing because you can just download my chart book and then you can use the chart book as is, right? So the only thing I'm looking for here is I'm looking for peaks and valleys. So the valleys are where we see volume starts to taper off. And the volume profile, all it is, if you don't know already, it's just a measurement, or it's the volume in terms of price, instead of where usually we see the volume at the bottom of the screen where the volume is in relation to time. For the volume profile, it's the volume in relation to price, right? So the only things that we're looking for is where we see a peak or where we see the most volume. This is where we can expect to see a response. And then also our volume point of control, where we can look to also see a response. So if you haven't figured it out by now with this strategy, what this does is it looks for we anticipate and we look for a response at particular levels, right? So what you want to happen is, let's go back to our big screen here. So we can see that we have our power range lines. This is the same price action. This is the same structure, the same day. We can see that we have our power range lines, and there's a white line here as well that I'm gonna get to in a second. We can see we have our lines in our volume profile here on the screen, right? So once price, let's see up here, let's just go ahead and let me give you a focal point. So once we got price trading up here, once price starts to trade back bearish once we start getting some pullback to this, we're looking for the level, and we're also looking at our volume profile to see if we have a peak at that level. And that's what we'll be looking to see if we get a response, and then we'll make our decision if we want to take a trade. Okay, so that's an overview of how this strategy works and what we're using to trade this strategy. And then, in addition to that, once we use our indicators just gives us another point of reference. So also we have our volume profile, we have our power range level, the PR +1, right? But we also have our K band sitting right there, and we also have our itchy stop sitting right there. Okay, so we can use all of this and we can say, okay, we got a lot of things lining up here in this one little area right here, so we can expect to see some buyers in this area. And as you can see, we dipped a little bit lower than the itchy stop, but we did see the buyers finally start to push the price higher and take over briefly back to our previous resistance. So that's just a real quick overview of the pieces of the strategy. Now, some bonus indicators that you can use if you want to is, we're going to use market depth for these. And the first one that I'm going to talk about is these white lines, which is the balance zones. Now, for this, I'm not going to go into the balance zones and how to come up with these balance zones. This is a really simple thing, but just if you download my chart book, these balance zones will also be in there, and you can see that these balance levels are at consistent intervals, so it's nothing complicated. But I will get into how to come up with these balance levels and get into a little bit more detail about these balance levels in the bonus section. All right, so in the last thing that I'm using is the delta, right? So this is my delta board. So with this delta board, it's in 30-minute intervals. Now it doesn't, other people use different time intervals. Just me personally, I use a 30-minute time interval, and I don't really use this delta board a lot. Only thing I'm using this delta board to see is kind of the energy of the market or the breadth of the market, but I'm not really using this too much to make trading decisions. So one little simple quick way to look at this. So right here we have like the red is at negative 1100. So this kind of shows us that this period, in this 30-minute period, we had a lot of sellers in the market at this time. We had more sellers than buyers. If we get over into this area right here, you can see like it's kind of in the low teens and low 100s. This, I see this more as neutral, like neither side really has control. That's just the way that I read it sometimes, but it's not a 100% thing. I don't really use the delta board to make any real trading decisions. So it's just something that I'm looking at currently, and then I'm just, and it's just something that I'm watching, just keeping it back in my mind. And also it's kind of giving me that extra little confirmation of what I'm seeing in the price action, okay? So this top level, we have the delta, and this middle section, we have the cumulative delta, which just adds up all the delta for the, this 30-minute period. So again, don't read too much into this. This is just a way to see the energy, another way to see the energy of the market, another way to see the breadth of the market, and then you have your total volume. Again, I'm just using this as a way to see the energy of the market and the breadth of the market. All right, so this is just a brief overview of the pieces of this strategy. In the next section, we'll get into all the details about how to implement the strategy. But just to do a quick little recap, all you really need from the pieces of the strategy is the volume profile and the power range information, right? That's all you really need to trade this strategy effectively. And I would recommend that you actually only start with those things. And the reason that I'm recommending that is so that you should focus most of your attention on the price action and the price structure. And all of these tools and these indicators, all they really do is just help make the interpretation of the price action and the price structure a little bit easier, right? All right, so that's going to conclude this portion of the course. So let's go ahead and dive even deeper into and figure out how to implement this strategy in the next section.